Terdal, can you just start off by telling me what the exact plans are in terms of fundraising?
Yeah, first of all, thank you very much for giving us this opportunity. This is a very important day for GMR and also for the Indian infrastructure as well. GMR has concluded today a foreign currency convertible bond deal with Kuwait Investment Authority for a 60-year foreign currency convertible, and it has been subscribed by Kuwait Investment Authority. As you are aware, Kuwait Investment Authority is one of the world's largest global sovereign wealth funds, that is SWFs, and it is a $600 million fund which invests across the globe, and this is the first significant largest investment of Kuwait into India. This signifies a lot to the country, to the sector, as well as to the GMR group.
How much have you raised, Madhu? If you could tell us again, and at what price has the conversion been set? I mean, I may have missed that.
Yeah, we have raised US $300 million, approximately 2,000 crores. And this is, of course, subject to the approval of the Reserve Bank of India. But that should be concluded very shortly. The details of the instrument as under, it is like a perpetual bond. It is a 60-year instrument. It will carry a coupon of US $7.5, that is which is permitted by the Reserve Bank of India. That is the maximum that is permitted. And the coupon is payable annually. And yeah, that is the details of the instrument, Mr. Anuj.
Okay, so 2,000 crores will be raised through this FCCBs. Can you tell us, when the bond eventually does get converted to equities, will there be any kind of dilution, and if yes, what will it be?
Important thing to note here is the conversion will be happening almost about 20% premium to the average 3 months average price of GMR group. So that conversion will happen at around 18 rupees.
Okay.
Okay, and apart from this FCCBs, Madhu, anything else that you have raised?
What is the important? See, let me summarize the important features that are inbuilt here. Number one is it is a 60-year instrument. Number two is that the investor has voluntarily agreed not to convert into shares for at least minimum of 18 months.
Okay.
But after 3 years of the bond tenure, we can actually mandatorily convert these bonds into equity. So this FCCB should be treated more as an equity rather than a convertible bond. So the idea is basically we are expecting, if as soon as the price hits 23 rupees 40 paisa and it stays consecutively for about 2 weeks of time, then the GMR gets a right to request the investor to compulsorily convert these bonds into equity. The bonds themselves are due 2075. So the bonds are not repayable till the year 2075. Our annual obligation is to service the coupon interest of 7.5% annually in terms of dollars.
Okay.
The advantage is that this 2,000 crores will be utilized to reduce the debt of the GMR Infrastructure Limited. And on a standalone basis, this amount will reduce about 40% of the GIL's standalone debt and about 23% of the entire consolidated corporate debt of the group. If you recall, we have been consistently telling that we will target to reduce our corporate debt by 30 to 40%, and this is just a continuation of GMR's turnaround story, and it just consolidates GMR's turnaround efforts.
Okay, so what exactly is the debt currently reduced by in absolute terms?
The total consolidated debt of corporate debt is 6,900 crores as on September 2015. If you recall, it was 7,700. We have already reduced in just about 6 months span, we had already brought it down by around 800 crores. Now, out of 2,000 crores, minimum 1,500 crores will be used to reduce the debt. So this will bring down our corporate debt on a standalone basis by 40%, and at a consolidated basis, it will be reduced by around 21%.
Okay.
So effectively, it will consolidated debt will come down from 6,900 crore, possibly to 5,400 crore range.
Yeah, Madhu, your equity has already been diluted quite a bit, and it looks like there could be further equity dilution. What about the airport plan that you had told us last month about using that as a mean to raise funds?
Airport is a separate process that is going on. As I told you, we are looking at raising resources as the airport holding company as well. But that is one of the methodologies we are using for raising resources. Possibly as and when the efforts culminate, I'll be able to speak more on that.
No, but just to follow up the question that Anuj was asking, is it that you are not receiving enough interest in any of these stakes? Because, not just the airport, you had plans to sell one of your Hyderabad hotels as well, and that plan has been on for a year now. So when you have so many assets that you can sell, why have you looked to, use the FCCB or the debt route?
Sonia, let me explain to you. I think we are making a very light of a very significant event. Let me once again raise this. GMR is raising various instruments and varieties of money at various levels. If you recall, group has raised totally, including this effort, 10,700 crores of equity money during the last 24 months. I would like you to please recall, totally 10,700 crores has been raised by divestment of assets, by doing a QIP, by doing a rights issue. So now this is a continuation of that effort. This symbolizes the foreign investors' interest in India, Kuwait's first major investment into the country and into the infrastructure, and it speaks a lot of the foreign investors' confidence in the GMR's group ability to turn around and overcome its current stress that it has been going through for the last 6. So I would like you to underline, this is an extremely significant development in the history of the group and in the history of Indian financial sector.
That point is taken, Madhu, but at the end of the day, it still does not sort your overall debt problem, which is so huge. And you still haven't answered in terms of the equity dilution. How much equity dilution will you entail now going forward?
No, equity dilution, if you take at 18 rupees level, currently we are at 61, 62%. It will come down to around 53 to 54% levels.
Okay.
As and when the equity conversion happens, as I again told you, the equity conversion will happen earliest 18 months from now, not today. And if the investor chooses not to convert, then we can mandatorily convert after about 3 years.
Okay, fair enough. So your promoter holding will come down
we get
to
our right when the rate comes to around 23 rupees 40 paisa.
So post...
And reverting back to... hello?
Yes, Madhu, post this
Going
FCCB
back to
issue...
question, let me state you, this does not mean that there is no interest in airport or we are not doing the airport thing. Please do not come to any such kind of an incorrect conclusions. This is the most significant because GMR infrastructure share price is subdued and it is affected by negative sentiments because there is a substantial corporate debt sitting at the GIL level. Our first effort and major exercise to reduce the corporate debt and give the confidence to the investors who have trusted in us. So this will bring down the 40% of the consolidated debt. So that is the significant step group has taken. Now, airport, definitely we will continue to do that. You will see that in the coming days, you will see those results as well.
All right, Mr. Terdal, we leave it at that. Thanks for joining us. Well, the stock is taking a beating now. It's down almost about 7-odd%. Mr. Tulsian, you track GMR Infra closely. What did you make of the management's comments and what do you do with the stock?
See, Sonia, let me quickly give the background. You know, Madhu has referred all these things. If you see the track record of GMR Infra, when they started, you know, when they acquired Intergen, actually the problem started happening since then. You know, those were the overseas assets, you know, gas-based projects and all that, and they have never been able to overcome that. And, you know, now there is no point in, you know, confusing on the standalone basis or on the investment entity. The hard fact is that 42,000 crore is the debt of the company on a consolidated basis. Take the market cap of 11,000 crore, it gives you enterprise value of 53,000 crore. The whole company's focus was earlier on the airports. They have huge land. They have 250 acres monetizable land, which they can monetize 5% of the Delhi airport is about 5,200 acre. They have only, you know, monetized about maybe 70, 80 acres, number one. Number two, they have not been able to do anything on the Hyderabad. Even if they have started the MRO projects, you know, the hotels and all that, and maybe the duty-free shopping, they wanted to raise their, I can, you know, go on and, you know, keep on this one. But the main focus they have shifted into the roads and power generation. What happened in this last couple of years, they have totally exited from road. You know, they realized at maybe about 3-4 years back, Anush, they were very possessive that we have EBITDA margin of 70-80% on road and all that. They have realized their mistake. But now what is happening here, even if I'm 100% sure that this debt is going to get converted. Firstly, I don't understand the logic of 60 years tenure of a loan, you know, because the concession agreement of the Delhi airport will expire after 52 years, or because that is initially 30 plus 30, 6, 7, 8 years have already elapsed. So I don't understand this logic. But even if you presume that conversion happens at 23, 24 rupees, what is the situation? You are paying 1,000 crore rupees interest every quarter. So where the money has gone? If you make a chart on every 6 months basis, the debt has kept on piling up. It has not reduced, maybe by 500 crores. So this is, see, we are all trying to say that, okay, we have a very good pipeline. We have, you know, been taking all the moves and all that. I'm grossly disappointed. In fact, the share is, I don't know what is the book value now. It's ruling at 16, 17. Market cap of mere 10,000 crore. If they would have capitalized the land at the earlier point of time, they were very hopeful on the aero, you know, allowing them to charge those airport ADF and UDF, you know. Nothing has happened, you know, nothing has happened. And in fact, they have to exit from everything, starting from Intergen, road projects, power projects. And ultimately, even if you see the airport where the capital employed is 15,000 crore. And on the roads, they have employed, on the power generation, they have employed 23, 24,000 crore. So we know the state of, so I won't buy any of this argument of the management. I have been closely tracking this company for 5, 6, 7 years. In fact, I had the interactions with the management also, including Madhu. So I won't be able to.
So even at 16, it's not a buy.
No, it's not a. See, Anuj, if you are playing on a punt that 2370, I may give an argument that 2370 to hoga, because ultimately we know that it's going to get converted. So you buy on that premise. I won't play as a fundamental analyst on that theory.
All right, that's quite a risky call to take actually, but yes, must be cautious about GMR Infra. That stock is now down almost 7-odd%, but there's quite a bit of sell-on news actually. If you look at Relcom.